we take a simple wedge pattern, right? So price is, trapped between this wedge. I'm looking for consistent touches on both sides. I like a market that is very accurate. So it's really respecting these two areas. Again, I apply that concept to all breakout patterns. So for example, let's say we take a box breakout, right? So the same principle where I want to see really nice touches of the tops or bottoms. And for example, if one of these areas has better touches than the other, that might actually be the area that I become biased towards trading. So let's say we take the same box breakout here, where we could say, okay, the market might break out either way, but let's say the bottom of this box has touches that sort of look like this. The market, kind of touches, maybe overshoots a little bit. But let's say the reverse side here, that the top of this box is very accurate and all the touches are nearly pinpoint to this top of this box. Well, I tend to move towards looking to trade the breakout long rather than short, because the accuracy of this area makes it easier to trade. So that sort of general concept is what I apply to almost all breakouts, whether it's a head and shoulders pattern or a wedge pattern or a falling channel, ascending triangles, whatever the pattern might be. That's one of the sort of filters that goes through my mind when I'm trying to, limit down what I'm looking at. So, again, if AutoCharters populates out, 60 things to look at, well, we can't watch and follow all 60 things. So what I do is, again, I'll use their quality indicator as I showed you guys. I'll use the length indicator as I showed you guys. And then I'll use the visual indicator from my own experience to limit it from there as well too. So that's sort of a general look at breakouts. Now, how do we trade these breakouts, right? So I've shown you guys a few ways to trade them. I've shown you what I call preemptive breakout bars. And again, we're going to go over that in a little bit more detail now, more abstractly, as some of you might even have not really even understood what I was talking about, and that's okay. And I've showed you another type of entry, which is using a wick bar. Again, there are multiple ways to do this. For this video, though, let's focus on preemptive breakout bars. And the reason I'm going to focus on them is because they are my favorite. And I say that because they tend to be the bar that I play the most. They're very simple, and it gives you another additional filter to entering your trades, right? So, for example, how do you know when to enter? Do you just enter when this market breaks out and closes above here? Do we just buy and then hope price goes up? Likewise, do we just enter when price breaks down here, and right as it breaks these lows, do we just sell? Do we want price to close X amount of distance away? So there are a variety of ways that I'm going to show you guys how to enter into breakout trades. And again, it's situational, right? Not every situation is the same. And as a trader, don't treat every situation as the same. But what you do want to get going here is rules to guide you. And these rules are when put into place, are going to make you a consistent trader and are critical to long-term success. Again, along with being disciplined and all the other things that you need to be: patient, disciplined, consistent. I mean, without those as a trader, you will not see long-term success here. So let's go over, in this video now, let's go over just preemptive breakout bars. And it's actually very simple. So a preemptive breakout bar to me, or a preemptive breakout situation, is sort of just before the breakout occurs, right? So let's go back to and use a simple triangle example, right? And let's say we really don't have a bias which way price is going to go. Again, sometimes we're going to have that bias, and we'll see those situations, right? So we've done that where, we're looking at a falling wedge and we're saying, okay, our bias is to the upside, because falling wedges tend to break to the upside. That's sort of what the pattern is indicating. But then sometimes you have side-to-side patterns, whether it be a box or a triangle pattern that's just sort of dead flat in the market, and the market might break out either way. So a preemptive breakout of this situation would be before you get that big breakout, right? So, let's say price again is consolidating down, we're looking for an entry, and before the breakout actually occurs, before the big move either down or up occurs, right, which is what we're looking for an entry point into this marketplace. So what I do here is I take simply a few different price action bars that I look at and we teach in the group, and I apply it to this situation. So for just this video, and again, you're going to see other bars are applicable, I'm going to utilize outside bars for this video. I'm going to utilize outside bars and double low higher closes and double high lower closes to explain what we're looking at here. So let's just explain the bar setup first and then apply it to a breakout situation. And then again, I want you guys to go back and utilize AutoChartist, the pattern recognition software for you, and go and look for these situations and just start to watch them and see how much more accurate you can be, how it helps you with your stop loss placement, your entry, and we'll start to give you a rule set to guide you through these breakout trades. So let's start with outside bars. So again, I've already explained these in videos, but now you'll have sort of a general abstract video to come back to if you get confused. So outside bars are simply engulfing bars, right? So let's say, for example, we have, this is a bearish bar, right? Let's just say price opened here and it closed here, okay? So for an engulfing bar to occur or an outside bar to occur, we have two types. We have a bullish engulfing bar and a bearish outside bar. So both of those bars indicate different movements. So if we have a bullish outside bar, that bar would engulf the previous bar. So it would have a lower low than the previous bar. It would have a higher high than the previous bar. And again, it's going to close generally in the upper portion. So we really want it to close in the upper quarter of the bar. So, you know, anywhere from say here upwards is going to be considered a bullish outside bar. And reverse, likewise to the downside here for a bearish outside bar, let's say, for example, here's a bullish bar, just a regular old bullish bar. And then the next bar engulfs that bar, has a higher high than the previous bar, a lower low than the previous bar, and again closes near sort of the bottom of the bar here. So these are just engulfing bars, right? So you have a bullish outside bar and you have a bearish outside bar. So when now we're applying this outside bar situation to a preemptive breakout situation, or this is what will be a preemptive breakout bar or a trigger bar here. So let's go back to that same wedge situation where again price is consolidating down. Right? So we're looking for a breakout. We're looking for a tip off here. So let's say we move this bearish outside bar into here. It would look something like this, right? So let's say we have a bar that kind of just sits here, maybe bounces off the rising trend line, and then that next bar maybe engulfs that bar and closes outside of the pattern. So price is just starting to break out, but it's also giving us a bearish outside bar. So what does that bearish outside bar tell us? It tells us a lot of stuff, right? First of all, it tells us price tried to break long, right? And sellers rejected us down and closed us underneath the previous bar's range. And again, sometimes you have many more bars before this, right? You might have another bullish bar, you might have a bearish bar, and it might engulf that entire range. So now we're getting a preemptive bar telling us, signifying that a breakout might be coming here, right? So now we know, okay, listen, instead of just outright buying or selling, we're going to sell because we have a price action trigger. So let's look at this situation again a little bit closer. Again, here's our wedge, right? Price is consolidating down. So you get the new trader who says, okay, I know a breakout might be coming. What should I do? Well, let's say this happens, right? Price starts to move higher here and starts to break out, right? So people start buying. Then what happens? Next bar, price moves back into this area here. So now you got trapped, right? So how can we filter ourselves out of this situation where we're buying just on a break? Again, let's apply the outside bar situation. So once again, let's take that wedge, right? Let's show price consolidating down. Let's show price start to break out here, right? And let's say here's the last touch to this descending trend line, right? Let's say that's a little bullish bar right there that closes right there. Then let's say that next bar, right, opens right here. Price moves higher, so it starts to trigger in buyers, and then what happens? We collapse down. We get a bearish outside bar that now false broke out of the top trend line and now is indicating a move down. Well, instead of hopping on the buy here without any sort of information and just hoping the breakout sustains, let's utilize this bearish outside bar as a trigger point or a preemptive breakout bar to signify a move down. So this is the type of trigger that I look for in a lot of situations, whether it's a box situation, a channel, a flag situation where price is ranging. So I'm looking for these preemptive breakout bars as one of the types of entry points into the market here. So in this case here, we would know, okay, listen, we can now sell this bar. We know that price is breaking out of this pattern, and Hopefully that move now continues down, and then we start to work towards where are our targets and our trouble areas and managing the trade, which we will do in another video. And again, you can see me managing on the trades that I've already done for these videos too. So again, what I would like to see you guys do is start to look for these preemptive breakout bars. So whether it's a channel, right, whether price is consolidating in a rectangle, a flag situation, a falling wedge, an ascending wedge, whatever it might be, start to look for those situations. And the opposite's just true for a bullish outside bar. So again, let's now take a box situation, right? Let's say price is consolidating in that box, right? Same thing. So instead of just buying as price breaks through this area and hoping it continues higher, and then, some work, some don't, and you start scratching your head saying, well, how can I filter these? How can I get better at pinpointing my entries? Look for a trigger point, right? So in this case here, look for a situation where price sort of stalls before that breakout, and then you get price try to move down, moves higher, and gives us that bullish outside bar, right? And you really want that outside bar to either close just above this breakout area, and that would really signify, okay, we've closed above the resistance point of the breakout. Price should continue higher now.